Wireless customers get stuck paying hundreds and even thousands more for years and years because they think it's hard to switch. Not with us. It takes just about 20 minutes and you can change your plan anytime without extra charges. We use the same towers as the big guys, so you'll get the same fast nationwide coverage without the big wireless bill.
Our plans start at just $20 a month, and for a limited time, switch and get your second month free. Call 1-888-FREEDOM, visit consumercellular.com or a store near you and get your second month free today. Plans include $5 credit for auto pay and e-billing. See site for additional details.
My name is Whitney Allen. I am a widow. My husband, Ryan, died. We never thought in a million years we'd have to use life insurance. The unexpected happened. With Ethos, it is so fast and easy. It's 100% online. You can get a quote in seconds, apply in minutes, and get same-day coverage. No medical exams, and you can get up to $3 million worth of coverage through Ethos.
Get your free quote at ethos.com/term. That's ethos.com/term.
Time spent on application may vary. Online health questions required.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
This is Tucker.
Here at the Massachusetts Department of Elementary and Secondary, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
As a to-do list is full.
Trying to exercise, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts. What is the new exemption for the state? Does that mean that a married couple living in Massachusetts with $4 million in assets could eliminate their estate taxes?
So yes, there has been some changes. Now we're almost a full year in, of course, heading into a second year into the change. The change is now $2 million. It used to be $1 million for estate tax exemption. Now it's up to $2 million. And yes, if you are married, but you actually do trust planning, you can shelter $4 million. But folks, that doesn't mean that's all you do. For folks with $3 million that want to eliminate taxes, we can do that. But we can also think about protecting assets from the cost of long-term care. It allows us to do both a little easier now with a higher estate tax exemption. So think about ways in which you can use the irrevocable trust to not only shelter and be able to reduce your estate tax by sheltering up to $2 million on the death of each spouse, but also starting that important 5-year waiting period running to protect those assets from the cost of long-term care.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide. It's called Balancing Asset Protection and Avoiding Estate Taxes. You can call 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
All right, it's Chuck, Mike, and Tucker with you here on the Financial Exchange. We are, getting economic data coming out from the U.S. government again as we get into December. Earlier this week, we had a delayed release on the jobs report on Tuesday. So we had a Jobs Tuesday, which was kind of fun. Don't think I ever want to do it again, but it was nice for a change, I guess. And today we get a CPI Thursday, which is not overly unusual. They're usually on Wednesdays or Thursdays, I believe. Maybe even Tuesdays occasionally. So nothing too crazy there. About a week delayed, but again, nothing bad. And I think when we look at it, the Tuesday release of the jobs data, we said, guys, the data here just really isn't particularly good. Obvious caveat, hey, there's some sampling issues related to when the shutdown happened and when data was being collected, so don't read too much into it.
Where did you grade that thing? Like a C?
The jobs report?
Yeah. I don't think I gave it a grade, but I was C at best for me.
C minus, D plus. Anytime that the unemployment rate goes up 0.2% in a month, that's not great.
Technically over 2 months, but yeah.
Yeah, either way, it's not great. So it wasn't particularly good. This kind of the mirror image of that, in that same caveats apply, hey, data collection, yada yada, like all that, but coming in with a much better CPI report than anticipated. Now, we don't have month-over-month data because there is no October CPI. So we can't look at the month-over-month data, but when we look at the year-over-year data that's present in it, it does show up and say, yeah, the CPI for the last 12 months decreased from 3% down to 2.7%, and core went, kind of in the same direction, down to 2.6%. So I think overall, it points towards some improvements on that side of things, and is an encouraging report with a caveat. data collection was disrupted, and we don't know, exactly what the next couple months are going to bring as those disruptions ease.
Yeah, it's really missing quite a bit. We can typically dive in here, and when these reports come out, you hear us talk about it frequently. Like, yeah, I know the headline number is going to be quoted as 2.7%, but that's not the most relevant thing. The most relevant thing is how has it done lately? And I guess there you can cobble together something, because what we do know from this report is that core CPI, so stripping out food, stripping out energy, it rose 0.2% compared to the September reading. So again, we can get that much at least, that hey, the pace of increase over a 2-month time horizon, September to November, was pretty muted, and were that to continue, that would be fantastic news. But yeah, you look at this, as someone that looks at this report every month, you just kind of glare at it and you're like, what do I do with this?
Yeah, so good news, but again, like, we can't really dig through and be like, hey, like, here's what we're seeing on this. It's more just kind of, all right, I guess this is, kind of what it is here. So it's good news that we saw some improvement in the rate of inflation. It still is a little bit higher than you'd like to see, but quite honestly, if we clocked in at 2.7 on inflation next year, yeah, I would not have any issues with that, just because we've talked about, hey, if you're ending up, anywhere in the 2s, that's generally historically where we've been the last 40 years. I think if you got 12 more inflation reports that look just like this, you'd say, great, don't have to worry about that right now. It's not a problem.
Yeah, what markets are reading right here is that with an inflation rate of 2.7%, the Fed does not care about inflation. They're going to care about that ugly jobs report that we just discussed. And that to me is the whole implication of markets today, is inflation at 2.7%, even though it's above the 2% target, will not be of concern to Jay Powell and the gang.
So I think this does set up the first half of the year nicely with these two reports, in that, to me, and this has been the way things have been evolving over the last few months, the question in the first half of 2026 is not, does inflation, continue to trend up? Rather, it's, does unemployment continue to trend down? And do we hit those points that historically we've hit, where it goes from a linear move down, 0.1% every month or 0.1% every 2 months on unemployment moving up, to, hey, it starts to accelerate, and then you see a month where unemployment goes up by 0.3%, then by 0.5, then by 0.5 again, and finally, next thing you know, after 6 to 8 months, unemployment has risen 3% and starts to peak.
Yep. A few caveats that I can think of here. One, we continue to get a lot of help from energy markets. I know that doesn't play into the core numbers here, but frankly, oil slips into every other price measure that we use, and so we've been dramatically helped by energy prices. Should they trend
not the year-over-year situation, though?
No, year-over-year it's flat, but that's still helpful, right? If we're targeting 2% inflation and energy prices aren't moving upwards, that certainly helps along the way. The other piece that just comes to mind that I don't think will have a dramatic impact on inflation, but certainly might be stimulative, is all the tax changes. And specifically, seniors, in my mind, are going to have a pretty big tax benefit from this. They are also accounting for a larger portion of spending than they have historically. And so do you have some spillover come March and April when those tax refund checks come in, plus the lower withholdings kick in for some employees? I'm going to go maybe.
Yeah, I think. But
I don't think that shows up till April, May, June timeframe. So I think you're right about the first half. And sorry for interrupting you.
No, it's so I think this is the battle lines are drawn now in terms of the things to worry about in the first half of next year. Does unemployment worsen? Do we start seeing more pushback on AI financing and maybe a slowdown in CapEx? That happens. Yesterday, just as an example, we had the report that Blue Owl was pulling out of a $10 billion financing deal for an Oracle data center in Michigan. So do we see things like that popping up? And what do we see from housing in terms of employment? And